Okay, the demonstration for Chapter 8 will be problem 8-4B, beginning on the bottom of page 404. So what we're going to do is calculate the bank balance and compare that to the book balance. And we're going to make adjustments to both types of accounts. Okay, so in this example we have the Williams Company, and on the bottom of page 404 it gives you an example of the previous month's beginning balance or bank reconciliation as of October 31st. So what we see here on the screen is the balance per bank here, as well as the balance per book is what we're going to calculate. And this is going to be as of November 30th. So to start off, on page 405, it gives you some information regarding where to start off at. So just above the instructions, there lists two items. First, it says there was a credit for $1,375 and a collection for $1,300. Okay, and then number two, it says there's a debit for printing additional company checks, etc. And then at November 30th, it says that the cash balance per bank is $5,958, while the balance per book, or per bank, excuse me, is $9,100. Okay, so that's the starting point. So what we're going to do is start off with the bank side. So at the top of page 405, it lists the information from the bank statement. And then below that, it lists the information from the company's books. So what we want to do, and this is also in your book on page 384, there's a chart. We want to make sure that everything that has not been included in the bank balance, which is originated from the cash balance from the company's statements, get added to or subtracted from the bank statement. So what we want to do is go through and look at or compare the cash payments first, okay, to make sure that they line up with the bank statements checks. Okay, so if we start off, and we'll start off at the bottom of page 404, all we want to do is look at the listing of outstanding checks beginning with check number 2451 and just examine the bank statement to make sure that they've been cleared by the bank. So if we start off with outstanding checks, and these will be deductions from the bank balance. Okay, so in this listing, so we look here, so check 2451, it appears as an outstanding check here, and we look on the bank statement and see that it's not listed. So therefore, we have to list check 2451 as a deduction for $700. Then we keep going down this list, and we see check 2470 has been cleared on the bank statement, so we don't need to include that. Check 2471 has also been included. We don't need to incorporate that one. Check 2472 does not appear to be listed on the bank statement, therefore we need to add it. And that's for $270. Then we look, check 2474 for $578 has been included, so we don't need to include that. So we continue on page 405 and look at the cash payments for November to make sure they've already been cashed. Okay, so check 2475 shows up. Check 2476 for $1556 shows up. Check 2477 also shows up for $330. And then check 2478 for $300 is not listed. So therefore we need to include it on the statement. Now the next check is 2479. It's included. Okay. Now for this one, it was listed as $890, but if we look at the bank statement, it was $980. Okay. So on our book statement, or book part of the reconciliation, we have a difference. So this difference, so we just subtract 980 from 890, is a difference of $90. So this is an error that needs to be adjusted for. Okay, and if we look back at the bottom at the problem, it lists that there was an error. There were 2 errors made by Williams Company, so that's 1 error. Okay, so we're going to subtract this out because the actual amount of this payment is more than what was listed in the cash payments journal. Okay, so we want to subtract this error out. So we say less error for check number 2479. Okay, so this was for $90. Okay, then we continue on to look at the outstanding checks. So we start with check 2480. That's included in the bank statement. Check 2481 is also included. Check 2482 for $350 is not listed. So we include that in the amount. Okay, continuing on, check 2483 is included. Check 2484 is not listed in the bank statement. So in this particular case, we want to add this one also for $460. Then check 2485 is also not listed. For $525. Check 2486 is included in the bank statement, so we don't need to include that. And then checks 2487 and 2488 are not listed in the bank statement, so we need to add those into our reconciliation. And these are for $210 and $635. Okay. So the grand total, we'll just sum, for the outstanding checks is $34.50. And actually, we'll move this. Okay. Now the next item is to add any deposits in transit. So in this particular case, we have one deposit that was in transit before October 31st for $842. So we want to make sure that that's already been added in. Okay, so we look on the bank statement, $842 actually shows up on November 1st. Okay, so we don't need to include that. So we go to our cash receipts journal for the company and we compare that to the bank statements. Okay. Okay. So in this particular case, we have the deposit for November 3rd for $666. It shows up on November 4th on the bank statement, so we don't need to include it. The deposit for November 7th for $545 also appears on the bank statement. November 12th for $1416, excuse me, shows up on November 13th. November 17th shows up on November 18th for $810. The November 20th deposit of $1642 shows up on November 21st. However, there's an error here. So this is the second error. Okay. So we have a difference. $1642 minus $1624. There's an $18 difference here. Okay. So we want to subtract that out. So we have $18 difference. So again, $1642 minus $1624 for the error. Then we continue on with November 24th. There was a deposit for 1412. Then November 27th for 908. That also shows up. And November 29th for 652 shows up. Now the 1130 deposit for 1541 does not show up. So we need to add that deposit in transit. Okay, for 1541. Okay, so if we look back on page 384, we've added the deposits in transit and we've listed the outstanding checks. In this particular case, there are no errors that were created by the bank. So there are no bank errors. So now we can figure out what the bank balance is, or the adjusted bank balance. So in this particular case, we want to start with 9,100. We want to subtract out the outstanding checks. And then we want to add the deposits. So now the new balance is $7,191, which is the correct bank balance. Now our balance per book should also equal this after any additions and subtractions. So we've got the errors listed. Okay. Now the only thing we need to do is take care of items 1 and 2 on the page, on page 405. So in this particular case, in number 1, it says there was a credit for $1,375 for the collection of a $1,300 note for Williams Company, plus interest of $91 and less a collection fee of $16. Okay. So what this means is the bank has collected this money for Williams and put it into the account, meaning that it has already been included in the bank balance. So we want to add this to the deposit balance. Okay. And what we want to add is just a note. Okay. And so in this particular case, the note was $1,375, and we want to add the interest of $91, and we want to subtract out the collection fee of $16. So this particular case, so the $1,375 is actually the net. Okay, so this is what we want to include for our balance. Okay, so that is inclusive of the interest and the collection fee. Okay, so we want to add the note, and then we also have in number 2, it says a debit for printing of additional company checks. So this is a bank charge for printing, $34. Okay. So my total subtractions, equal $142. We'll move this over to the next column. Okay. So my adjusted book balance should equal the $59.58 plus $1,375 minus the charges of $142, and so that also equals the adjusted bank balance.